stock. Sintex is the stock that's on our radar right now. So let's invite the management of Sintex, Samir Joshipura, who joins in to give us his view on, of course, the quarter gone by and what he expects from the quarters to come. Mr. Joshipura, thank you so much for joining us on the show. It's been a good quarter for you. So you've seen an income growth of almost 14%. Your profits have gone up by about 36 odd percent. And even if you look at all your businesses, there is a good growth that you've seen on the income side in your plastics business. So just take us through what the second half of the year will look like in terms of both demand as well as operationally. How do you expect to perform?
Good morning. What you said is right. Our top line has grown this quarter by 19%. PAT has grown by very healthy 37%. Even our EBITDA margin has nudged up. So I think it has been our effort to focus on the growing in a segment where our margins have been better. So I think that effort would continue. Historically, our second half has always been better than first half. Even if you look at last year, second half has been revenue-wise as well as margin-wise has been better. So we expect the same thing. Our prefab growth has been pretty healthy. We have grown by 47% there. Our custom molding business has grown pretty well, India as well as overseas. So we continue to focus in these areas, and we expect that we meet our guidance.
Okay. Good morning, Samir. Thank you very much for joining us. Well, actually, it looks like a very good performance. Surely your raw material costs must have fallen because of the way in which commodity prices have trended. Why is it that the margins have not improved?
So if you see, Lata, margin has nudged a bit.
Okay.
In fact, if you see raw material cost, it has also gone up slightly. This is usually the effect you have when there is a price which is falling and there is a lag impact. So okay, this quarter we have seen raw material as percentage of revenue going up a bit, but it would taper down to normal levels in next half. So I think it's just that impact, but we expect to continue improving our margin. We have increased by 20 basis point or so, and we would going forward improve. I mean,
okay,
I think, as I said, our focus is on to high margin areas. So as we consolidate on those areas, we would see our weighted margin keep improving.
Can you guide us on margins?
Sorry?
Can you give us a guidance on how much margins may be in the second half?
Okay, so I think we do maintain our stand that we had at the start of the year, where our top line should grow by 20% and EBITDA should improve by 50 basis points.
Okay. Okay, so 20% top line growth
over the last financial year.
Okay, fair enough. And can you break up this 20% top line growth for us between all the three segments? Where do you see the larger chunk of growth coming in from?
I mean, the two clear areas where we are seeing the significant upside coming from is prefabricated business that we have, and custom molding business. Custom molding is almost 50% of our revenue. So we expect growth in India as well as our overseas segment. So, I mean, we have shown healthy growth. Our overseas segment grew in the first half by 22%, and this is despite euro conversion impact of almost 10% compared to last year. So in fact, the growth has been much higher in euro terms, but in rupee terms it gets tapered down. So we expect our custom molding to show a significant growth as well as prefab.
Your
and
infrastructure
these are the two segments we clearly.
Sure. Your infrastructure business has been quite disappointing this time. Your total income is down about 70%. What is the second half looking like?
So I mean, this is what we have been focusing on to reduce our exposure to infrastructure business, monolithic business. Margins are not so well. There are certain uncontrollable elements which we do not want to get into. So I mean, that's what I said. This is the area we are consciously by design going to get out of over a period of time, and focus only on really very few orders which are profitable. So the reduction in infra business is as per the expectation.
Okay.
Actually, I mean, that's what we planned for.
Well, actually, the markets will very quickly, probably in a couple of months, start looking at FY17 numbers, Samir. You've guided us for 20% in the current year. What does it look like if you have to look 1 year down the line? Will things improve in FY17? Better than 20?
So in our case, FY17 would definitely be better because we are coming up with our capex, which should go live this financial year. Okay. So should start generating revenue next financial year. So the impact should kick in FY17. So it should look better. Specific guidance we haven't come up with yet. I mean, we would come probably in the last quarter.
Okay, can you just detail for us exactly what is the quantum of capex and which month it goes live?
Okay, so this is, we are putting up 324,000 spindles of compact high-end count, cotton, for cotton, spinning the cotton yarn. The capex is 1870 crores and we should be live by the capex by end of this year, financial, so 31st March. We have started trials of some of the spindles, almost 30,000 spindles right now in this month. So we would gradually increase this and by March we should be live with all of this capex.
All right, all the best for the quarters to come. That's the word coming in from Sintex Industries. 20% top line growth is what they expect by FY16 and there will be fresh capex coming on board and that will help them in FY17 as well. But let's move on. CCL Products is the other